What's up guys, it's Messi. Welcome back to another video. I'm bringing you guys the strategy that has made me over $14,900 in the space of the last 21 days. Now, the truth of the matter is this strategy isn't going to be easy. It's simple. However, it really isn't easy. When it comes to trading, the majority of people think they can get away with learning a strategy, not learning the reasons behind why that strategy works, having absolutely no justifications whatsoever, and thinking that it's going to work even without gathering any statistical data. So if there's one thing I want you to take away from this video, it is even if you learn the strategy today and you already know the surrounding concepts and you understand the justifications, what I want you to do is I want you to conduct the statistical data that is required. I want you to go back into FX Replay and actually do the back testing to prove to your psychology that you are actually able to trade this and the strategy is actually profitable, i.e. it has a positive profit expectancy. And by doing this, you're eliminating performance discrepancy significantly. Now, what is performance discrepancy? Performance discrepancy is your strategy's performance minus your actual performance. So your strategy's performance, you get it by backtesting. So that's reason number one why you need to do backtesting, why you need to get that statistical data. And then you deduct your actual performance from that. And then you get a positive performance discrepancy. If it's negative, you're doing well. If it's positive, there are things that you need to work on. And 9 times out of 10, the main thing that leads to performance discrepancy is or are psychological blockages. You have to work on removing those psychological blockages in order to make sure that you perform as best as possible and you get that highest profit expectancy over that longer term macro level trading that you're doing. You have to think about trading as a macro thing rather than a micro thing, right? If you think that if I backtest this today or if I jump into my first trade and I don't win, then my strategy is unprofitable, then there's something fundamentally wrong with your mindset, right? If you look at things from a probability standpoint over the next 30 days, over the next 60 days, over the next 3 months, what you end up doing is you essentially take the trades required, right? You don't miss your high probability setups. You take the trades that are actually required, and over time you'll see profitability because you have that positive profit expectancy. It's maths, right? Instead of gambling, right, rely on mathematical probability in order to make sure that you make a return from the market. And most people don't understand that. So what they end up doing, they end up just trying different strategies, strategy hopping. Once you understand the foundations, once you understand the reasoning behind every single thing, for example, market structure, why you understand market structure is important. I'll go over it briefly in today's video. If you understand institutional supply and demand, why does price actually react from these institutional zones? You know, most people can't define order blocks and why order blocks actually work. Liquidity, I've seen countless traders just mark out the entire chart of theirs and say like, oh, this is liquidity. Like, okay, yeah, we understand the entire market is liquidity, but like, what actual liquidity are you looking for? There are types of liquidity that you must actually know and essentially combine confluence upon confluence in order to actually get that high probability setup that you need. Let's just make something completely and utterly clear. The strategy can work for you, but you need to understand the concepts behind it, right? You need to understand why the strategy works. Have you ever heard people talk about how important psychology is for your trading? 90% of trading is psychology. Well, that means that unless you can prove to your mind that your strategy has a positive profit expectancy, then you're going to put your own self at risk of not making money. Why do that when all you have to do is learn the concepts surrounding it? Why are we looking for this? Why are we looking for that? You use multi-time frame analysis, execute using a number of different confluences, and then actually get a trading strategy which works day in and day out. Let's jump onto my trading view here and I'm going to show you exactly what I mean. So markets move one of two ways, right? They make high highs like this. Very, very rough example. Or lower lows and lower highs. And obviously high highs and high lows. So essentially, you need to understand which phase of the market that you're in, right? And if we identify this on the high time frame, i.e. this your swing time frame, this could be maybe 1 hour, the 4 hour, the day, whatever the case may be, whatever lower time frame that you actually tend to trade. Once you're able to actually identify this and understand this, what you can do is you can understand, okay, what phase of the market are we in? Are we pulling back or are we pro trend? Are we continuing to get that break of structure, that next break of structure? And that next break of structure actually comes over here. If you're able to understand if price is about to pull back or if price is about to continue to cause that break of structure, then you're able to kind of formulate trades. Now, let's look at a more realistic market environment, right? This is very, very textbook, right? Markets generally tend to move something like this, right? Something along those lines. Now, some people wouldn't recognize that this is still a bullish market. Well, this is still a bullish market because our swing low, our most recent swing low, if I just draw this to make this a lot more simple, There we go. Our most recent swing low, which is over here, hasn't actually been taken out. So we are still in that pro trend, so we are still bullish pro trend, right? Only once this gets taken out, that's when we can say, and obviously we get a candle closure, but that's when we can say, okay, the expectational order flow has failed. Order flow is essentially the flow of the orders in the market, the flow of buy or sell orders. We can say expectational order flow has failed, we're moving bearish or we're moving bullish. We're switching bearish or we're switching bullish, right? And unless we essentially displace that swing low or swing high, if we're bearish, then we are still bullish or bearish, depending on obviously market trends, right? Let's take a bullish example. As we can clearly see here, price is moving up. We caused the break of structure over here, and then we cause another break of structure over here. So now our new swing low, our new range would have been here, and then would have been here. And then these swing points, our new range is going to be about here. We now are able to trade freely within this, and our goal is to identify within that swing pullback, within this range, are we bullish or are we bearish? You can identify that on a lower time frame using lower time frame changes of character on the 15-minute, for example, which gives you an early indication that the 4-hour or 1 hour, depending on what you trade, is going to switch bearish. Or we're going to continue and actually break that swing high. And what this does is, if we're able to see that if the 1 hour is pulling back, right, or we see the 15-minute begins to pull back, then we can say the 1 hour is probably going to follow through with that, or the 4 hour is going to follow through with that. 15-minute really gives us an early indication. So what that allows us to do is actually take trades from this particular point onwards. So let's say a zone was created over here. When price taps into it, what we can actually do, even if our swing time frame is bullish, we can still identify this point of interest and take trades from it, even if our swing time frame is bullish, because we've identified that we are now moving counter trend, right? We are now moving, price is now moving in order to create that swing low, which is seen over here, which I'm going to mark out like this, right? These are my swing lows. So realistically, if you're able to understand which phase of the market you're in, you're just increasing the probability of success, right? You're increasing the probability that your trade's actually going to play out. And we do this by just using changes of character, using understanding the time frames, marking out all of this. You can see it that I always do it on the chart, right? I always do it. So I understand where price is. I'm going to give you this as an example. Now, you have to combine the concepts, but just a very, very rough overview of market structure. But essentially, as we can see here, we've seen that price has caused a break of structure and moved towards this low over here. If I replay time back over here, what we can actually see is that on the 15-minute time frame, we've got bearish movement, right? We've also got bearish movement on the 4 hour and the 1 hour. Me personally, I switched to the 1 hour as of recently because I did some more back testing and I found out that the 1 hour gives me a slightly higher profit expectancy, but we'll get into that another day. But regardless, what we can see is that the 15-minute internal is strong. Don't worry about the internal as of yet. The expectation here is that price is going to tap back into this point of interest and then move towards that week low. And obviously we can see that 15-minute point of interest. So what we can literally do is we can wait for price to tap in. I'm going to completely get rid of this like that. And then we can just, I'll show you guys a trade. What we can see is price taps into that. Now, what we can do on the 15-minute is wait for the 15-minute to switch bearish, because that confirms to us that the 15-minute is now moving towards a week low, right? So as we can see here, we have an inside bar over here, meaning this candle has been in the inside of the previous candle. And as soon as price taps that, it's a guaranteed change of character. So as soon as price causes that change of character, the next thing we can do is then jump onto a lower time frame and look for a place to actually look for a trade, right? So we can see that the 15-minute has then switched bearish. Price had actually tapped back into this particular zone over here. When price had tapped back into it, 5-minute internal has switched bearish, right? So what that means is we are going to expect price to continue bearish, going on to the 1-minute time frame and then waiting for that change of character after. So I can see a change of character over here. As soon as price causes that change of character, I'm going to mark out my fib zones. I'm going to just see where price pulls down to. Okay, it pulls down over here. I'm going to just see if price can actually get me in at a better entry, then taps back into this zone. We obviously have both the zones over here. Price taps back into this zone. My stop could be just there, and then obviously above the institutional zone. Like realistically, like so above the institutional zone, we could go and target like a 1 to 3 risk to reward, for example. Very, very easily hit a 1 to 3 risk to reward. And this is on the 1-minute time frame, meaning your trades tend to be pretty quick. Stuff like that, you combine all these different confluences together and then you get to find a strategy. Realistically, it's just understanding market structure, understanding institutional supply and demand, understanding liquidity as well. If you want to see countless years of back testing and me actually doing this live with you, then go ahead and join the completely free Discord. Apart from that, it's very, very simple, right? If you want to become a profitable trader, if you want to do whatever you want to do, if you want to make generate those consistent payouts, then go ahead and just get the statistical data, have a full roadmap, right? If you want to go to the first link in the description, I have a completely free roadmap. You can also book in a completely free strategy session with myself. And essentially, I'll just help you through whatever you need, any questions that you have, and hopefully we'll make sure that you hit your trading goals. It's going to be it from me, and I'll catch you guys in the next video.